What's going on, everybody? Good morning. Robbie, I knew you'd be here. What's up, bro? So we're just waiting for this news driver at 8:30, and we're gonna mark off some things that we want to see repriced to. So because we're in all-time high territory and we're bullish, we're gonna take this candle and mark off 20 to 30%. Right in there. Okay, and then this candle's wick here. Now, why would we mark off that spot? Well, when your candle opens here, when it reprices to this previous candle's wick, that's a rebalance. And typically you see some fireworks out of that. So that's on the table. This is a implied fair value gap. This is a balanced price range. If price is going to get really weird, it's likely going to snap through it. Now, because of these news drivers and non-farm being coupled with a banking holiday last week, today and tomorrow we're going to get really, or they could be very angry. So we'll see. So our IP to data range. So we got fair value gap at equilibrium. Right there. And that's about it. We could see a spike into previous day's high and then come for here. We could drop down and rise. It's anybody's guess today. So we're just gonna study and read the tape. So we got 2 minutes till the news driver. Let's go to the 4 hour and see what all this mess aligns with. if we can get below here, this is our mitigation and reclaimed order block, and that would send us maybe into here or here. We'll see. Michael suggesting buying underneath lows and selling above highs in a bull run, and just continue that until it fails, basically. So double bottom right here. And not a lot going on here. So the 15 minute. Now, if we're really bullish, we could just dip into here just a little bit and rip. So we were targeting this yesterday afternoon and it didn't materialize. So this is our breaker unicorn at the midway point of the previous day's candle. So there'll be a lot of sensitivity here if we can get in here. Give me a 5x5. Someone send me a DM. Let me know you can hear me. Boom. Launched first. Launched off the previous 20% candles, daily candles retracement. So we've just taken buy side liquidity out of the bull flag that's broken out to the upside. So I'm going to be aiming for this double bottom right there, right now. I want to see price dive into here. Now, why would we want to see that? Because we don't believe in buying pressure, and that's not buying pressure. That is a cookie. That's a retail cookie. So when your bull flag breaks out, I hit reverse. So we went up first. I'm assuming that today is going to make the high for the week, and then we could get a nice crash down. Let's check out the commitment of traders report. We are still in a buy program, but a hedge. It's just a little weird being in this environment. DM yet. I'm not on YouTube. I can't see the live chat. There we go. Thank you. There we go. Thank you, Caspian. you guys. So I want to see what we're going to do with this fair value gap right here. How do we treat it? John Connor's got cookies for us. Nice. In a perfect world, I'd like to see it snap down right under this candle. Kind of like that, but hold down there. I mean, right here. Now I have an expectation that I want to see sell side liquidity repriced to. So if I'm looking at this fair value gap, I would like to see it flipped. Five seconds. Can we close below here? Beauty. Now let's see if we can keep this alive. So we're looking at this fair value gap. I don't know if we're going to flip it. I would like to. But we could launch off of this violently. In 5 seconds, creating another fair value gap right here. And it could rise up, and I'd like to see it launch it right back down into here. Now, everyone who's chasing this breakout this morning, all the gamblers who are in profits, it's unfortunate for them. They're probably gonna get wiped out. So the more that this thing trades up, the more longs are being induced. Now, whether we crash today or tomorrow, that's irrelevant. We're expecting a retracement into the week at some point. But the more that this thing rises, the more the emotional traders who don't really know what they're doing jump in. So there's this tiny little vacuum block right here, this little volume imbalance. Let it play with it for a minute. So we flipped this guy back into support. This is a balanced price range right here. You see how this fair value gap from this candle's low to this candle's high? Look at how it gets one big single clean snap back through it and uses it as support. It's likely going to want to run that wick out. Right there. Oh, wow. So I'm just watching how it treats this candle it's messing with right now. The patience to wait for your model. Oh, and do you guys even have a model? Well, I should hope so. So I'm looking at this retail Rick reversal candlestick pattern here. Looking at this bearish order block right here. How does it treat it? Need an angry drop. It's not angry enough, but I can see that it's making long liquidity and short liquidity right now. Right here, please. So when NASDAQ is really bullish, you'll see this like serpent seahorse style pattern going on here, and it can absolutely moonshot from here. It doesn't have to come down. Keep in mind, I have no actual real expectations today. It's kind of a wild card. Don't expect everything that you would expect on normal days to work out today. Okay, I don't have an account loaded up. We're just reading the tape. You shouldn't be trading today or tomorrow. Unless you're Sean, then do whatever you want. But as a student of mine, these are just one of those days you want to sit tight. Just let everybody else get trashed. I'm being good, attaboy. Yeah, CPI, non-farm payroll, FOMC. But this week is a little special because last week we had non-farm coupled with a banking holiday. So post non-farm week, Thursday and Friday tend to get a little uncomfortable. I just pulled out a big giant gray ear hair. Felt great. So it's almost 10 to 9. Okay, so we got 2 minutes until this macro hits. Now, this is where you could be going, what do I do? What do I do? Just do nothing. Shut up, Master Fren. Just get me into a trade. No. You're going to study. You're going to learn. So you can get into a trade. Now, if you're watching this quietly, or you're on the fence, you are just wondering if smart money concepts might be right for you, don't use today's video as a barometer if you should be studying SMC or not. Okay, price could do what I want it to do, and then it could do exact opposite. It's literally a wild card. We're just studying. But if you are on the fence, if you are new to this, go and check out ICT on YouTube. Go and watch the Market Maker Primer series and the core content. You do that and your eyes will open up. And if you would like mentorship, I'm here for you. It's my counterparts are charging an arm and a leg. It's typically because they suck at trading. So, I'm not charging $100,000 for this. It's $800, $133 a month. Bam, target acquired. Now I want to see how we treat this. There's going to be a lot of sensitivity in here. My eyes are focused down here. That doesn't mean I'm going to get it. And if I was to take this fair value gap here off this bearish order block that I mentioned earlier, that would be target one acquired. Now I would be aiming for this. That doesn't mean it has to come here. And we don't need that to be profitable. We just need a nice little chunk of that. That's a good spot to take a piece. It could moonshot from here. Could. Now, because we made this big giant idiot box last night into London, that's awesome. I'm very confident, and any other day that we'd be coming down here easily. So this is where you would want to move your stop into some sort of profits. Now, the problem with having targets and candles moving is it's psychologically crippling when you're in a trade, especially if you're in a profitable trade and you're not really used to it. Things that can help with that is understanding what institutional order flow looks like. Okay, once price is in a run and it's diving for something specific, you're going to want to see certain signatures unfold. So we've got this big series of down close candles here. Now what's inside of it? Well, we've got this volume imbalance right here. We could come and reprice to that. And we've also got this fair value gap right here. Now typically you're going to want up close candles resisting up close candles. But we don't have any in this price leg. So this tail here, you see how it overlaps with that right there? There's no fair value gap. This one didn't overlap, so there's a fair value gap. We would like to see this hold resistance. An immediate price rebalance where there's no fair value gap means you open, touch that candle's tail, and then snap down. That is an immediate price rebalance. And I ain't bragging, but I did take a trade. And I terminated it right here. I took my piece right here and terminated here. I'll show screenshots to my students in Discord and Twitter. It's one of the perks you get being a student of mine. So notice how we closed below half of the fair value gap. My confidence is soaring that we're going to at least come to here. Now, what terminates this? Well, I'm in a short. So what would I want to do to measure order flow? Well, I'm going to pull my fibs bullishly. And why would I do this? Because if I'm bearish, I don't want to see this respected. Why do you think I would terminate my trade here? We could rip off this for our OTE for the day. and we could moonshot to 20. My wife's got some crazy moon targets. Now, if I'm short, I would want to see this snapped violently. But Master Fren, why would you close your trade there? Because I don't need this to be profitable. All I need is a nice chunk of the move. First and foremost, as a smart money student, you must see the direction first. That's first and foremost. Once you have that down, it's not game over, but it becomes a cakewalk. When you see signatures in the market at certain times, and you've got a good idea of where prices likely want to gravitate toward, that is you framing a trade. So how many ticks could I frame in that trade from this bearish order block that I called out to this low, here? Well, that's 447 ticks. Can I get a 3-to-1 R out of that? Yes. Can I get a 5-to-1 R out of that? Yes, and much, much more. But now I'm done trading for the day. It was obvious to me. I hit my trade. I'm out, and I'm not going to do anything else. I'm going to take my money, and I'm going to run. No matter what the candlesticks do for the rest of the day, it does not matter. These will not convince me to take another trade. And that's a point where I would like to get a lot of my students to, because a lot of you are still clicking the button, you're still button mashing, you're like trying to beat your older brother at Mortal Kombat, and you're getting pissed off and you're smashing the remote against the TV. I get it. I totally get it. And you're upset because you don't study enough. You don't trust what you're doing because you know in your heart that you don't have self-control. Those are the big, big things that we got to work on in trading. Self-control, contentment, the ability to change your vocabulary just enough so that you're not down talking yourself, so that you're not psyching yourself out. Because as soon as you take a loss, you think, oh, it's a loss, I'm a loser. You're not. You're not a loser. And if you are, be a professional one. You're a winner and you deserve this. We've got setups that, well, let me put it this way. The same people that say that algorithmic price delivery is a hoax or a fraud would kill for our setups. They would kill for them. It's a time-based model that repeats at the same time every day. How is that not the most perfect thing you've ever heard of as a trader? A time-based model that you can trade at the same time every day. Holy shit. Just on its face, that sounds like garbly. It doesn't actually sound real. Well, I just did it. And you guys see me take and post trades on Twitter all the time, so it's not like, you don't see the power. But that right there alone should provide you a level of comfort that you never thought existed. So this is our bullish order block here, and I'm looking at above the market, this fair value gap here. We got to get through this balance price range here first. This is not a signal to take long. We're just studying. We got this little fair value gap right here that was just repriced to that little bit and then seen it close below. So we've got a bullish order block, what looks like could be a bearish order block. Seeing it both ways. We gotta see some proof here. We got just under a minute till 9 a.m. You know, if you see these little buggers, you're going, well, which one are you gonna blow out? The bullish order block or the bearish order block? I don't know. It could go either way. It could dip right to that tail and freak out if it wanted to. Yeah, set some realistic expectations for yourself. Okay, you're learning something very, very, very hard to do. You're learning something that 90% of people cannot do. So what's going to make you part of that inner circle? What's going to get you to the point where you're content? Where you're sitting there waiting for something specific in the market to unfold? So right there, and I'm looking to see how it treats that. Does it want to run that out, or does it come run out this orange box? That's what I'm looking at. It can come one tick shy before this and rock it back up if it wanted to. Okay, so what we're fighting with right now is this bullish order block here. So if we're bearish, which I am, I want to see this snapped to and through and rush for my target. No high fives. Now, look at that. This bugger here. I am not against the idea that it comes back up into a premium market. This would generate more longs for fills. Ooh, watching that midway point there. Lots of sensitivity there. I think that's no fair value gap. It's balanced. This is the decider right here. Just looking at this volume imbalance right there. And once it starts going away from where you want it to go, you're looking to see where it would likely want to go toward. That's a good spot. Touch and dump perhaps, or does it snap back through it? Seconds, snap back through. Likely going to want to seek this box. A little tiny buy side liquidity pool right here. And that's from people chasing short, not knowing what they're doing, trailing their stops. The market makers don't want these guys in for the move, so they'll stop them out first if it wants to come down here. just sweeped this buy side liquidity pool here. Just got in there, dug in a little bit. Now, how far does it want to go back up? So that orange box is going to be tough to get through there. So it's going to need to be rather violent if it's going to get back up into this fair value gap here. Yeah, some people's devices are horrible for the price action is doing the talking. So some people's phones are really horrible for volume, and if that's you, my apologies. You can go get an app called Volume Booster and check it out. It's 5 in the morning when I started this, 5:30, 6 a.m. My family's sleeping. So I just try to be a little bit quiet. So this is our tiny little bullish breaker right here. So we've got our high, lower low. That's a good argument. The wicks made a lower low, the bodies made a lower low than the bodies. And look at how it's having trouble getting through there. It needs to snap. Speed and distance so we come right back down. We snapped up, closed back above, right for the very last split second possible. I want to see this thing launch now up into my gap, and then we'll figure out from there. So it's now 9:07. It's 30 minutes after the news driver. Just gonna go check the economic calendar. So we just got a bunch of yellow stuff, and then at 1 we got the 30-year bond auction. And then tomorrow PPI and consumer sentiment. So not too bad. Oh, you're just posting that screenshot in the Discord now. Yeah, and not a huge amount of size. Just 2 contracts. So this breaker should have launched us already, in my opinion. It's 9:10. The macro's over. We should be already well above this orange box. So now I'm looking at this little fair value gap right there. And how do we treat this? So technically, this is our market structure shift here. If you're bullish and you think price is going to come up here, great model here. But that's one thing about seeing the algorithm both ways. Was this a market structure shift or the best sell signal in the history of ever? That depends on you and your directional bias. Where do you want to see price gravitate toward? See, if you wanted price back up into here, this would be something you would want to see. I don't. I want to see price in here. So that is a bearish mitigation block. So far, the whole thing with order blocks and stuff like that is you can get really, it's daunting. There's a lot, and you gotta really understand how price action treats itself. It's not very nice to itself. It just beats the crap out of itself all day. If order flow is bullish, you want all your bearish PD arrays to be blown out. If you're bearish, you want the bullish ones to be blown out. So when people ask me, how do I come up with bias? Well, which way did you Judas? Was it the opposite of your bias? Right? And then you go, okay, well, it's 10 a.m. Which way is price running? Is it bullish? Are you blowing out bearish order blocks? Are you SR flipping fair value gaps? These are the things that the insight that you gain just studying and not even worried about taking a trade. Your biggest worry right now should be, how can I marry price action? How can I get this girl pregnant? That should be your biggest concern. Get to know her. What does she like to do? What days? When is she finicky? When is it a no-go? You know what I'm saying? So seeing a little bit of sensitivity out of that fair value gap, I would like to see it run out, actually, real hard. So I'm looking at this candlestick here that it just touched. This bullish order block. Could launch it back into there. Seeing a little money printer breaker in here. Not exactly what I want to see, but that's okay. there. It's got 30 seconds to prove me otherwise, but it looks like it wants to go up now. Unfortunately. If we close above this down close candle right here, we'll be looking good for a short. "30 seconds. It's all on a closing basis. You could wake up into there and then get rejected. Oh, 13 seconds, I guess not, eh? It's fine. Bam, nice strong close there. So back up above this mitigation blocks midway point. Totally lame. A lot of chop right now. More than what I'd like to see for a folder. So let's check out our regular trading hours. So right now we're trading right here. Oh, it's ripping now. Let's mark out that high there just cause. There, now we're at our sensitive price point. So now I'm looking at this guy here. And we could just keep going and keep going and keep going. She's bull runny. So we just close back above this box again, showing strength. Yeah, that looks like a bear flag that's about to blast off to the upside. Just gonna take a small break before opening bell. Give me 3 minutes. everybody was asking if I use indicators. No, I do not use indicators. When I'm trading, this is what's on my charts. Nothing. It took me a while to do this. As a new student, as one of my students coming up, I don't mind if you like to use divergence, moving averages. The thing with indicators is they all read price. All of them. They read price action. They are averaging out price action candles. So instead of like, it's like trying to buy weed back in the day before it was legal. You know, would you want to go to your sketchy buddy who you'd have to give him money to go, you know, for an hour, and maybe he'll come back with your weed? Or would you rather just meet the dude yourself? You know what I mean? That's kind of how I look at it. It's like people relying on indicators to tell them what to do. Price action's literally telling you what to do. The market makers can't hide from you in here. You put that stuff on your charts, you are literally helping the market makers camouflage themselves. Now again, that's not to say that every day you're going to hit banger setups, that you're not going to see it perfect every day. It's not going to be perfect every day. But the days where it's singing to you a really good tune, then you got a nice trade. If the moving averages are reading price action, what does that tell you about price? It is the leading moving average. There is no reason to have indicators on your charts. People use them, and because they didn't have, there's prior to my mentor coming out publicly, there was no information on candlesticks. Not the way we do it. Oh, just got a coffee. Oh, we're about to turn it up. Coffee time. But yeah, so would you rather get your weed from the middleman or go to the source? You know that guy's gonna freaking pinch a nug out of there. There are some tools. I'm not saying and my mentor kind of has a beef with that stuff, and that's fine. But the thing is you can find something that repeats at the same time that we look for things that repeat, and you can use your indicators. That's fine. It's not the system, it's you. That's all it is. It's just you. It has nothing to do with your indicators. It has nothing to do with your account size. It has nothing to do with your phone. There's no demons in your IP address sending the elite or the market makers your position. They don't care about you. They don't care that you're in here. They're counting on you to be in here. So this bear flag about to go parabolic as suggested, which is unfortunate. I didn't get my sell side targets yet, and it's not a big deal. So I'm bearish on the day. I'm profitable even if price launches. I was able to counter trade the daily trend profitably. You can be wrong in your bias and still be profitable. You just gotta, either price action does what you want it to do or it doesn't. It takes a bit. So anyway, you can find something that repeats with indicators on your charts. You can, between 7 and 11 a.m., you're going to get a price run. Okay? Within that price run, everything's going to repeat. The moving averages are going to do the crossover. You're going to see, Sean's shark fin after liquidity sweep. Like here, for example. We'll do Sean's shark fin right now. I can already see it. And if it's not there, I'd be thoroughly surprised. Okay, here we go. I'm thoroughly surprised. That was not a shark fin. There was no divvy. There was nothing. Oh, here we go. Here's a little baby fin. So you got some divvy. You put your horizontal line on the candle that started the divvy. I would pick this one here to that one there. This candle to that candle. Once you crash back above the line, you can take a long. Just a scalp long. It might not be the bottom, but it's a bottom. Typically, I like the retest of it, but we use order blocks. So, bam, there's our order block right after the shark fin. So you can find stuff that repeats as long as you're content, as long as you can take a trade and sit on your butt for the rest of the time. Thank you, Adam. I'm not really a goat. I'm kind of a hybrid between caveman and alligator. Half caveman, half alligator, half walrus. Thanks, buddy. And look at the bear flag's gonna get the cookie here. Okay, so we've got 2 minutes, 3 seconds till opening bell. This is gonna get fun. The king of all foods. What's up, Hanson? You're funny, dude. Okay, so now that we're nearing opening bell, now we turn on our range. We want to see where, because this is New York closed yesterday, so the real regular trading hours is just New York. So we're going to use our opening range gap as kind of a barometer of where price is likely going to want to frig off to next. So you can see the bid and the ask here. And then our closing point here. So as soon as that candle opens, I'm going to anchor to wherever it opens. It's gyrating, it's getting it. I like this. I like it. I like it a lot. Smurfington, check out the 10-minute time frame. It looks like it's going to run for my targets here. So that bear flag has just started breaking out. Now watch it just rob everybody. 3, 2, 1. Bam. So right there. Now notice how this candle, when it comes below where it opened, it's still white. Now it's touched the midway point. Let's see what happens. Does it frick off to the upside? So that's our opening range gap. So no frig off to the upside. Marking out my pool. Or was it here? That guy right there. So it's all on a closing basis. Where does this candle close? Close below half, so we could say that we're come and retest the midway point and slap. Harder. just took that pool but didn't take that one. I hate when that happens. Just run it out. And almost one more tiki poo. Boop. Now do the Tom Petty. Oh, just vacuum blocked the back above half. Oh no. Oh no, Jake, help me. Jake, help me. Seconds. Yes. Yes, close below. 5 seconds, close below that black line. Nice. Now run out that sell side liquidity. See how it kind of made this candle here? That rejection there, that was their double bottom, triple bottom style stuff. And watch them all get raided. So the bear flag breaking out to the downside. So look at what happened. We rose up first. Traders chased this. I shorted into their chase and sold or bought their sell stops. Price then dangles around for a little bit, makes this little money printer and a bear flag. It snaps down. So think about it. When people are chasing this, they get stopped out. They're chasing this. Now they're too emotional. Now their stops are right here because they see this. They want to see continuation. Okay, so price just trashes them for a little bit. And we're talking about the emotional traders here because that's what in the smaller time frames, it's still the algorithm's capitalizing on. It's the emotional retail traders. It doesn't know that they're in here. The algorithm can't see that these traders are in here. It's counting on them to be here. It generates these patterns on purpose. Now they do work out sometimes. That's not up for discussion. They do work out, and you can find consistency and profitability with that. The problem is you're probably not. Would like to see that double top repriced to by the end of the day, so have that level on your charts. 20,918.25. The whole reason is because the shorts are in profits here. Okay, so once we grab all these sell stops here, it's likely gonna want to trade them for these buy stops because this is a very textbook bear flag. And it's not that it can't play out, it's that people don't pay themselves. They don't trail their stops. They lose so much that once they're in profits, they're just like, I'm gonna hold this till, and then they create some wild timeline that they're gonna hold on to a trade for just because it's in profits, and they'll just let it come back on them with nothing. And that's not what we do here. So we are seeing a little bullish order block. So we want to see this guy get railroaded real quick, or we're gonna come up here. Still leaving this sell side pool, so took that one but not that one. I hate it. I hate when it does that. Just friggin' run it out, because that tells me it's likely gonna want to seek a premium before running down. just somewhere, maybe take that wick first, but not that high, just that high, maybe. And see how we're dancing with the opening range right now? I want to see it run from here violently. Show me your violence. Oh mama, he says. It's always bothered me that the plural of walrus isn't walry. I can see why that would bother you, man. I can't believe I caught that crazy move up. That's gambling. Congratulations, you're a better gambler than me. And I sit here in amazement watching you call every move. Yeah, well, I don't think that the candlesticks are random buying pressure and selling pressure, so it's easy to do. It's easy to trust your setups when you understand that the algorithm repeats and runs people out all day, every day, and hasn't stopped since the beginning of charts. Man, I've been backtesting, or I was backtesting Euro in the 1970s. Holy man, they were ruthless. Before they went AI algorithm, price engine, it was actually people making the markets. They were ruthless. Like, sure, now that it's AI, the algorithm can't get sick and it's more efficient. But man, like, they were mean. Sometime I'll show you guys what I'm talking about, but my goodness. It was just like wild swings. Freaking thousands of pips, man. So it's 9:38 and we haven't left our opening gap. Look at how that opening gap was freaking support and resistance pretty much this whole time. Wow. Yeah, man, if you have it's psyop. That's what it is. Trading's a freaking psyop. If you have the idea that this is random, how the hell are you ever going to trust a trade? How are you ever going to trust that it's going to go to your measured move if it's random? You can't. So you've been psychologically damaged right out of the gate. You're dead on arrival. It's random. This might work or it might work out. It's just like, no, our setups work out. And if they don't, you had a 10-tick stop. And you weren't measuring your gap risk. Come on, show me some violence. Being cheeky. It's got to generate the idea of support before it runs it out. Look at how it touched the midway point too. Just beautiful sensitivity, bearish order block. Let's see if we can keep this going. Come touch this little tail here and then tank. Harder. Run them. Don't give them an opportunity to move their stops. Oh, come on. One more of those. Now, you seen today I was a little bit flip-floppy a little bit. Today I was a little bit flopping and groping. And I mentioned this right at the beginning of the stream. I have no real expectations of what I want to see unfold. We're just studying price and seeing what goes on because of the environment that we're in. Today just happened to work out in my favor. Well, I mean, we're what? $5 away from my target. So today just happened to work out in my favor. That's all. And because price action did what I wanted it to do, I took a trade. I closed it, and then I'm done. Right? So this is the type of stuff that I want to see you guys doing in the morning on permittable trading days. You're sending me your executions, you're very patient, you're waiting for your thing. If you didn't get the proper execution, write it in your journal. Hey, I seen the draw on liquidity. I seen it was likely to run to sell side. I didn't get the perfect entry. I gave myself a wider stop. Trade went in my favor. Bam. Things like that. But this is the type of like mindset you want to bring into your morning setup. You're waiting very, very patiently for a draw on liquidity, and that happened to the upside today. Okay, so then we're looking to counter trade that original move, because this is the Judas, the slaughterhouse move for opening bell, or sorry, for the 8:30 New York Open. The algorithmic open. I know 9:30s are opening bell. I'm not arguing there. So yeah, we look for our little 2022 model or whatever it is, and you know, if it's in agreement with what you want to see, take a trade. And this is what I'm doing every morning while I'm hunting with you guys in the Discord. I'm just waiting patiently. I'm not worried about catching the original move, and neither should you. The original move is for suckers. Even if you do catch that, that's a gamble. It could have dumped first, especially today. You want to be patient. Let it show its hand to you. Bam, target acquired. Let it show its hand to you first. Don't feel like you're missing out on this. You will need to FOMO into your self-control. That's what you need to do. You know those FOMO feelings you get when candles are moving and you just gotta take a trade? That feeling right there. When your model is not present, you should be FOMOing into your self-control, because that's what's going to make you money. It's not going to be catching this move, because you're not going to do that consistently. You might get it once in a while, but you know what? The next time you go to play a news driver, you're going to get walked on. 100% guaranteed, if not the next time, the one after. You're going to hang on to what it was. It was like when you met that girl or that guy and you just fell in love with him because the first impression was everything to you. And then you hang on to that first impression for the rest of your life in a miserable marriage because you're just hanging on to something that doesn't exist. That's this right here. Okay? Don't be fooled by that. If it would have went down first, we would have went for a long, and I would have been completely offside today. So, again, don't feel like you're missing out on any of this. It's generating liquidity for you to capitalize on. Think about it. Once you sell short in here, or even turtle soup, whatever it is for you, once you sell short in here, okay, who are you going to buy your position back off of? Think about it. If these guys are chasing a buy long, their stop losses are where? Well, the Elliott waivers love their 50% here, right? We got our 786 way down here, so there's accumulation for liquidity, right? So who is down here? There's sell stops down here from chasing this, and you can buy them. When you sell short, you have to buy your position to cover. You can buy off these losers here. I just did it. How do you like that? What is that? MP team pajamas there. MPJ. How you like that one? Boop. It just went down there just to the tick for no reason, because it's random. I know it's probably going to run after these bear flags here because they got their cookie, they don't pay themselves, and they're likely going to get rocked. So they're going yay, look at all this selling pressure, bear flag, selling pressure. Now they're looking for anything to continue off of, and it might. Just grab that pool liquidity right there and seen sensitivity. So now we've got a market structure shift with a discount fair value gap. Let's see if we can get a repricing back into there, and I will leave that for you guys to study. God bless you. Thank you for joining me today. I hope you found this one insightful, and we'll see you on the next episode. Peace.